Hello traders and investors, Will back here with another one, coming to you with a Sunday video, guys, and it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys are well rested, that you are over the anxiety of last week's crazy week in the markets, and that you've had a very nice weekend so far. Now keep in mind, in today's video, all of the options plays are going to be for selling options, more specifically for selling put options as part of the wheel strategy that I like to run on the channel. Why do I enjoy selling puts so much, and why do I do it with 80% of my trading capital almost every single week? 3 very simple reasons. Reason number 1, it's a very easy strategy to learn, manage, and scale up or down depending on the size of your account, guys. The concepts of the strategy are very simple, and if you just respect the rules, you should have a pretty good time scaling it up as your account grows. Reason number 2 why I love the short puts essentially is because it's a low time management strategy. 15-20 minutes a day is absolutely perfect for executing this strategy. So if you have a full-time job, you run a business, you enjoy traveling, it may just be a strategy that you would enjoy. And reason number 3 why I love this strategy so much is the consistency and the high win rate. As long as you're respecting all the strategy rules, most of the options, 90 to 95% of all of them, will just end up profitable premiums in your pocket by the end of the week. And for those are the ones that get assigned, you'll end up buying very high quality companies at prices that you really enjoy. So in terms of today's video, guys, we're going to do a few things together. Number 1, we will go over the expectations for the week. We know that the markets have been very bumpy and very choppy as of recently, with a big downward bias, and we are seeking to understand whether or not that volatility will continue into next week. So I'll be presenting to you guys a few statistics of where we are in the market right now, and also some previews as to macro catalysts that can impact the markets this week. We know it's a short trading week. Thanksgiving, markets will be closed in observance of Thanksgiving, right, Thursday. And on Friday, it will be a half day. So shortened trading week, but we do still have some macro catalysts that could move the market in between. Thereafter, we will get into the technicals of where we stand in the markets right now. After severe declines in the S&P, people pointing out the good old head and shoulders, several names being very oversold right now. Can we possibly see further downside? And if we do, where can we possibly end up? So we'll go through the technical aspect of the market as well, and just give you guys a good preview as to where we stand, what to expect for this week, and obviously how to properly position if we are playing short puts. Thereafter, I'll go through a few of these strategy rules, just a quick refresher. When times are very tough in the markets and it's very volatile, always best to remind yourself of the strategy rules and respect every single one if you want to have consistent and good results. And thereafter, of course, guys, we'll get into the top 5 options plays of the week. And after that, we will have 10 bonus plays as per usual. So make sure you stick around to the end to see those 10 bonus plays as well. So let us jump right into the action of today's video. And we're going to start off with the projections for the week, of course, right? Not predictions, but projections. So keeping in mind that the Thursday session was extremely volatile, and that was the last video that I kind of gave to you guys as well on the Thursday session, saying, it wasn't looking too good, equal lows. The bulls are going to have to put a big stop to this soon, or we could continue bleeding quite rapidly into further areas of support. Now, it was a good thing that Friday, we had a few bullish pieces of news. Number 1 was this one, of course. We had some comments on interest rates. So 2 Fed comments that were boosting odds of a December rate cut. Number 1, you had Fed member John Williams coming out very early in the morning saying that he would support an interest rate cut when the bank meets in December. He said, I still see further room for adjustments in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral. Now, Mr. Williams has been sometimes on the fence, and we know recently that the Fed has been very divided surrounding the interest rate cut in December. And we also know that interest rate cut odds priced in by the market were severely plummeting here, guys, over the past few weeks, right? You might remember just last week, at about the midpoint of the week and even earlier, rate cut odds for a 0.25% cut in December shot down to the mid-40s. That's very low. About a month ago, when Jerome Powell was speaking to us, they were in the 90s, and progressively over the past few weeks, as we were lacking government data from the shutdown, the rate cuts got lower and lower and lower, and it put a lot of pressure on the markets. But with Mr. Williams' comments, they shot back up to 71%. He was not the only person speaking that day. Federal Governor Stephen Moran also commented too and said that if he were the marginal vote on whether to cut rates, he would vote for a 25 basis point rate cut instead of the 50 basis point cut that he favors. So joining team 0.25 essentially. So that kind of put more odds in the favor of a rate cut in December, but we know that this has been all over the place. That helped backstop the markets in the morning. but it wasn't enough, guys. Early in the morning, right? We had a nice little bounce pretty much after the open, and then the market started unraveling a little bit into good old 10, 11 a.m., whereas most of the volatility was coming in all throughout the week. And then we had this come out here. Whether it was timed perfectly, whether it wasn't, I don't know, but it's quite curious. This came out of the Trump administration at that very moment, where the US was considering letting NVIDIA sell their H200 chips to China. That helped lift up the market when they were eroding a lot of the pre-market gains. And that's what kind of gave you the moonshot higher here from the 10 to 11 o'clock moving forward, which did contribute to a nice bounce throughout the rest of the morning. And then we kind of tapered back a little bit. So as of right now, the short-term structure is saved. The short-term bears are still in control. And we might see who actually wins this big old battle here at the lows when we take a look at the next macro data that is coming out over the course of this week. Keep in mind, on Tuesday, you have a producer price index report. That'll be another gauge of inflation. You also have retail sales, which a lot of people are looking at now, especially that the consensus is that the consumer is very weak. I mean, let's be honest, the consumer's been weak for arguably the past 2 years in terms of the discretionary spending. But now, when the markets are prone to a lot of volatility and reacting big to headlines, you do not want to see a misprint here on this retail sales figure, or the market is not going to digest it very well. It's just going to add to the bearish pressure. And Wednesday, possibly, it should be coming out. You can see here that we still have NA next to it. The government said that they'll try their best to get this report out there. However, we might not get it. If we do get it, though, pay attention to CPI, man. We know CPI has been a big concern for people. It's one of the reasons why the Fed just refuses, well, not refuses, but is so patient on cutting interest rates. If CPI comes in, if it does get released, if it comes in higher than 2.9, well, then these rate cuts will probably plummet a little bit more. And once again, you'll be adding to the bearish catalyst for the week. So keep that in mind. If you want a sense of where inflation actually stands, you can go to this Trueflation website right here. It stands at about 2.4%. This measures about 15 to 17 million different products per day. So it's a better representation of your average consumer basket. I would put a lot more credence into this number, a lot more confidence into this number as well than something that you would get from a limited basket of goods measured by the CPI and or PCE for that measure as well. Keep in mind as well, guys, in terms of where we stand now in the technicals, right? So we were commenting on the fact that, yes, we are indeed in a daily downtrend. Yes, indeed, we are in a bit of a weekly consolidation period, and we are under several key moving averages, the 50-day EMA, the 12-weekly EMA as well. So the bears are kind of gaining more and more steam, and they have cracked some very important levels. Couple that with a MACD that's crossing for the first time in the last 6-7 months, and you end up in a situation, right, where maybe the V-shaped recovery back to the all-time highs is not going to be easy. Now, that doesn't mean that we're going to absolutely plummet through the floor right here. You can see several moments in time where the MACD crosses, such as right here in the early stages of the month of December. And the market, yes, does have a 5% pullback on the S&P, but then kind of just oscillates here before eventually it kind of met its maker with tariffs, of course. And you can see many indications of this, whereby the weekly MACD does cross. It leads to a bit more downside, but you'll see even when it stays negative, the market's actually pulling up and recovering. So if you were waiting for the MACD to cross back positive to position, you may end up being late. Don't forget the MACD is somewhat of a lagging indicator, so please keep that in mind, right? So the technicals are looking a little bit dicey. We would still need the bulls to confirm the daily uptrend to understand that the weekly lows are printed. However, we have some indications that maybe we're closer to a bottom than not. Number one has to be the volatility index, of course, spiking last Thursday and Friday into the high 20s. And usually when you spike into the high 20s, at least, when you're not in a big tariff situation, right? Over the past year, 2 years, that's usually been when the market has been able to find a local bottom or just a local peak in terms of volatility, right? A few more market measures that we can kind of put some reliability into is this one right here. This is going to be your McClellan oscillator, another gauge of momentum in the markets. And as you can see right here, we are just now into pretty big, decently oversold conditions right now. And most of the times where you creep into these oversold conditions, sorry, I can't get in between here, but you'll see that although it can continue a bit further, you're approaching a local bottom sooner than later. You can also check this one right here, which is the Zweig breadth and thrust indicator. Excuse me for the pronunciation. Zweig. Some people say it different ways. This one too, man. Whenever we come into these deep oversold areas, it can mark close to a local bottom. It doesn't mean that the bottom is yet printed, but you are closer to a bottom than not otherwise. And other momentum indicators such as the percentage of stocks, right? Your stocks that are advancing, declining, and percentage of stocks above your 50 and 20-day EMAs, these short-term moving averages, right? Look at these nice bounces on the Friday session, yeah? So Thursday, we got absolutely crushed into only 25% of all stocks were above their 20-day EMA. And look at the market breadth returning on the Friday session. That was a nice bounce. So can we still oscillate a bit lower? Of course, but it just goes to show that the bulls are trying now to put in some bids, at least a lot more than they had been earlier on that week. And the percentage of stocks above the 50-day EMA, same concept, right? We're seeing some big bulls step in, and not in a concentrated fashion, in a broad market fashion, which is exactly what you want to see. The percentage of stocks on the Thursday session was under 30. And usually when you get under 30, guys, that's when you tend to start finding some of these local bottoms overall. As I said, it doesn't mean that you can't erode the price a little bit more and complete these pullbacks possibly into the 26 weekly EMA to send the SPY down for a total top to bottom retracement of 6 to 8%. But it does mean that possibly the biggest volatility is now behind us. And even though we could fall a little bit further in price, it is, in my opinion, time to start nibbling at the markets, or at least selling some put options using the high volatility to lock in some very attractive levels far below the current market prices. That's why I enjoy using short puts in this type of market environment of a high VIX, because I can get levels on some stocks that when the VIX is low, I cannot get. A lot of my favorite companies now have pulled down 10, 15, possibly more percent from their all-time highs. And I do believe that now they're in much more manageable valuation scenarios and also much more manageable technical scenarios than they were perhaps about a month ago. Otherwise, in other words, there's deals now. There's finally deals in the market, and I do think it's noteworthy for us to pay attention, considering that the overall macro is not that bad. I'll just do a quick summary of this. Once again, here are your bearish and bullish tailwinds. Overall, the short-term bearish catalyst at play. And the long-term one, sorry, this one I added to it. I was kind of making fun of people being a bit too bearish when I did the live stream for the Discord on Friday. I was saying that every bearish catalyst under the sun is afflicting the markets right now, including the moon's asymmetric orbit causing tidal hormonal shifts. It's a joke, right? But I'm just here to say, right? The sentiment in the market has been extremely bad, and that's led to the fear and greed index down here at about 11. So sentiment is bad. We're starting to get oversold on a few technical indicators. The VIX is really high. As a result, I do think it is time to kind of start stepping in slowly to some of our favorite names. And that is what I will be doing as well this week, after saving a lot of buying power in my accounts when I posted that big video 3 weeks ago, warning people to take some chips off the table because the environment was getting cloudy, very overbought, and very concentrated. Well, I've been saving and saving the buying power, and now I'm getting ready to deploy on some of my favorite names because some of these names are in very, very favorable locations. Now, in terms of deploying, we always have to remember that there are some rules to follow in terms of the put wheel if you want to have the best chances of success. Here are the rules. Take a screenshot because I won't be going through them individually. I used to do that on the channel a while ago, but I used to spend 10, 12 minutes per video, and then the videos used to be too long. So take a screenshot of these if you want to have a full description of every single one of these rules and why they all matter. I will leave a link to a video down below in the description. It's about 10, 12 minutes long. In a previous video where I used to go over these for about 10, 12 minutes, it'll be called Bull Market Wheel Strategy Rules Explained. Under that, it's going to be a little YouTube icon. That is the title of the video. Just click on that. It'll take you to the video. So take a screenshot of these, and remember, guys, especially in this type of market, yeah? High quality and high conviction companies only. Not momentum names that you read about twice, 3 times on Twitter or saw a couple YouTube videos about. No. Names that you personally feel are high quality with great business models and that you have high conviction in, right? Don't start writing it on a bunch of stuff that is down the most when you filter through your watch list. No. You have to be convinced that it's a high quality and high conviction company for you, possibly something that you use every day or a company that you know extremely well. Because at the end of the day, guys, if you get assigned on some of these stocks, you better understand what you're holding, right? And you better not mind holding it while farming covered calls, which is what happens when you get assigned. But I will leave a big video down below in the description to let you guys know how all these rules work together and why we should be respecting every single one. Now, with that out of the way, it was a bit long of an introduction, but I think it needed to be done, especially after last week with a lot of people anxious or panicking or just worried, all things considered, yeah? So now that being said, let us get into the top 5 options plays for the week. And you'll see, guys, they're all very high quality companies for me, okay? So company number 1 is going to be very simple. It's going to be Amazon. The reason I like Amazon is in 2 parts. Number 1, we have to talk about the valuation here. In around the 220 range where we currently stand, you're at a 28 forward price to earnings, a 1.4 peg. And what has changed on Amazon since they hit their highs after earnings? What has changed, guys, in the last 3 weeks? Oh, the answer is nothing, right? Nothing has fundamentally changed about the business. If anything, they just gave us some huge numbers, very positive numbers after earnings, and very good forward guidance. So when you know the problem is with the stock price and not with the business, that's when you find a bit of a dislocation, and that's indeed where I want to buy. That being said, we are also coming in to a very nice level right here, right? Nice area of support, 220 down to 210. You're coming into your 200-day moving average as well. Not quite oversold just yet, but still, I do enjoy playing Amazon. Down here in the lower 210 region, I feel like I am getting a very decent deal on this stock. And I will remind you guys, Amazon year to date, right? Year to date is still lagging by a wide margin, man. They're still only up 0.5%, 0.6% for the year. So I do want to be bidding some of these companies that are lagging a little bit behind, especially when they have very strong business models. Now, where am I going to be playing? Well, the expected move for this week, guys, is 214.03. It matters because we always want to be writing puts below the expected move, yeah? So how do you find the expected move? Just go to this website right here, barchart.com, type it into Google, bar chart, expected move, and then whatever stock you want to see. In this case, I have Amazon here, so you'll want to look at the lower price for the week on this graph right here, or below here in this table, the lower expected price for the week, and try to find short puts below that level overall. Now, keep in mind, the put options that we'll be looking at are weeklies, but I've been getting a lot of comments asking, well, can we do it on a longer time frame? Sure, you guys can go 2, 3, 4, 5 weeks out if you want. Just make sure you respect the rules in getting 0.5% per week. That's my minimum ROI. So if you're writing a contract for 4 weeks, you want to be getting a total of 4%, which is just a total of 2%, which is literally just 4 times 0.05, right? So there you go. So let's have a look at Amazon's options chain and see where can we possibly write some options below the expected move of 214. Well, you can see right now, if I'm looking for my 0.5% rule, I'll be looking for half of the strike price in cent increments. If you want to know where the 0.5% rule is, just divide the strike price by 2, and that's how much money you should be looking for at the bid. It's a very easy way to determine whether or not you're getting the proper premium. If you take a look, the calculator right here, right? Let's say we take the 212.5s, $1.26 divided by your 212.5. Well, that right there is 0.5%. You know, at least you're getting that. Don't go too low, guys. It's just not going to be worth your time. You're just not getting paid enough. And also don't go too close to the price either. It's just a bit too risky and you will face more assignments than not. The sweet spot that I've derived after running this strategy for years and years is indeed 0.5%. So Amazon at 212.5, I would not mind whatsoever, but even better at 210, if Amazon can drop a little bit more on the Monday session, maybe that even frees up the 210, which is the bottom end of the support range. So for me, for this week, it'll be one of those 2 strikes, either 210 or 212.5. I would not mind any one of those. And as I said, guys, if you want to go out 2, 3, 4 weeks of time, feel free, but for this video, I'll just be describing it using the weeklies. Now, moving on to stock number 2, we're going to be looking at another very high quality company, NVIDIA, which had insane earnings, but the market was just not having it with that Thursday and then subsequent Friday sell-off, which the Trump administration was able to save with that piece of news right there, right? Even Jensen Huang, you'll probably see it on social media, yeah? Some insider transcripts were released, and him saying, you know, we were kind of in a catch-22. If we posted really good earnings, people would say the AI bubble would continue. If we posted not so great earnings, they would say the AI bubble would have popped, right? So his comments were kind of exactly how the market is feeling right now about this whole AI trade. But the one thing you should focus on is what they delivered just last week, right? In terms of their most recent quarter. NVIDIA right now at 195, or at least where it was after their earnings, was at a 1.24 peg, a forward price earnings of 28.55. Now that we're down here at 178, you can pretty much take almost 10% off of these valuations, and you'll quickly realize that NVIDIA is not so expensive anymore, right? That being said, it has not moved since the month of July. So during this consolidation period, as the company improves its fundamentals, I want to play. Second that with the fact that you have a nice support range down here, 171 down to 165. But if you guys know anything about NVIDIA, you guys know that there's a lot of volatility on this stock, and you can probably play a lot lower than this expected move, but that is the expected move, 170.22 for the week. Let's go shopping on NVIDIA's options chain and see where exactly can we find some short puts on NVIDIA for this week or subsequent weeks thereafter. So if we have a look, the expected move is 170, but the premium here is too high. I'm looking for 0.5%, right? So we'll go down the options chain until we find it. You can see here that at 162.5, we are getting a bit more than 0.5%. 0.5% would be roughly 80 cents, right? Half of 162 is about 81. As long as you're finding 81, you're good. At the 160s, you're a little bit short. Hey, who knows? Maybe on Monday, if NVIDIA drops a little bit, maybe they'll free up the 160s. But now you know what I mean, right? The expected move is here, and I'm able to write all the way down here, close to the 200-day moving average, right? To be honest with you guys, I took some puts last Friday on the sell-off, and I was able to get the 155 strikes for a few weeks of time. That's insane. That's almost down close to the 12 monthly moving average, which is a level that I like playing off a lot. And it's very close to the next very large area of support. So if you also find NVIDIA on a bit of a dip Monday morning, well, just try to go as low as possible on the options chain while getting 0.5%. So NVIDIA is still a trade that I like very much, but I will be playing it with the volatility. I won't be playing super close, even though it's a nice level. No. Because we know that the markets are lacking a bit of trend right now, and they have a bit of a bearish bias. As a result, we want to be playing them with some distance and not being too greedy by going super close to the market, right? And possibly getting assigned and having NVIDIA pull back a little bit more, cracking the support, and then you're underwater from here and you're wondering what the hell just happened. That's what happens, guys. When the S&P and the Qs are in daily downtrends, you have to play the wheel a bit more carefully. So that being said, that's everything for NVIDIA. That's stock number 2. Stock number 3, another very high quality company, and this one is Netflix. So Netflix, right here, what we have is a nice weekly downtrend. The short-term bears are in control. We are now off the all-time highs by about 22%. Now, this is just essentially the monthly timeframes normalizing. We had a huge rally here coming out of tariffs. We were a bit overbought on the monthly, which I was saying for a while there, and now we're kind of normalizing. The next big area of support for Netflix is down here, 100 to about 90 bucks. Now this currently is the decent location, but if you're looking for a support trade and mixing that with a bit of volatility, we can afford to be a bit patient and go a bit lower. Additionally, right now at 105, the valuation is quite fair, a 32.4 forward price to earnings and a 1.62 peg. It's a lot better than all the way up here when we were arguably trading rich. So that being said, I am a fan of playing Netflix on this big sweeping decline that is coming closely into our support range. 101.12 is the expected move for the week. So let's go shopping on Netflix and see, can we get lower than that even on this shortened trading week? Let's go have a look, shall we? So November 28th, having a look down here, we got to be below 101. So let's have a look, right? Support really starts at 100 down to about the mid to low 90s. Yeah, so you want to be in that range, and you'll see here at 100, you're getting 0.5%. That's not bad at all, guys, right? At 100, you're getting about 51, 52 cents. Good for the week. Or if you want to try to find some premiums with more time on the contracts, that's perfectly fine as well. Keep that in mind. If NVIDIA drops a little bit, if Netflix drops a little bit lower on the Monday session, you're going to get even better strike prices, guys. Think the 98s, 97s, possibly 96s, depending how much Netflix could possibly drop. So I don't mind any one of these strikes at all. 100 down to about $97 is going to be the range that I'll be shopping in this week. Obviously, depending on the price come Monday morning. If Netflix pops a little bit and I can still find the hundreds, I'm fine with that. If Netflix drops a little bit on Monday and we can find possibly some of the high 90s, it's fine. I just want to be playing this entire area. I would not mind being assigned. And if we somehow get assigned on Netflix down there, guys, you're going to be looking at a sell-off of about 27% from the all-time highs. It's usually always been a good opportunity to buy Netflix when they're 27% off the all-time highs. What did Netflix do in terms of the AI trade, right? Nothing. The business hasn't changed at all. The only thing that's changed is the price. So don't get carried away in short-term sentiment, right? That's company number 3. Company number 4 is another one that you guys know and possibly love. It is going to be SoFi. And after a few weeks of me saying we were overbought up here, be wary of the monthly pullback, well, now we are finally getting it in a much more meaningful fashion, yeah? The weekly uptrend right now has been lost. So the short-term bears are in control. The daily also is currently in a nice daily downtrend. And we are coming into the level that I've been talking about for literally the past 2 months. 25 down to 22, which is the large support range up here from the prior highs in 2021. It is now going to be acting as support as well, more likely than not, right? 25 down about, 22, 21, 20. So this whole $5 range right there, and the 12-month EMA is curling higher. So we're just looking for a technical pullback after a very nice run, which could see us come pulling into the low 20s area, finding some base of support, and then possibly embarking on a new phase of rally, maybe late December or maybe early into 2026 or whenever the markets are done consolidating. But I do want to play this one from here down to where we want to play it, guys. That's a 30% pullback on SoFi. So I know this stock is not for everybody, but if you are a fan of playing SoFi and you've been waiting patiently to position, maybe this is your chance, right? At 27 bucks, we're at a 45 forward price to earnings, a 1.1 peg, and a 7.34 price to sales ratio. That's pretty good, but if you're selling puts down here at 22, it gets even better than that, right? From 27 down to like 22, which is where we're going to be shopping, I'll show you guys, is another 18% off of these valuations. And then it really starts to get quite interesting for SoFi overall. And they had really good earnings. This is just the market sending it down because the market's having a bit of tantrum right now. That being said, the expected move for the week is 23.54. Let us go shopping on SoFi and see, can we find some short put action down here below 23.5? So if you're pulling up SoFi really quickly, we'll go to next Friday's expiration, and you'll see here that at 23.5, the expected move, you're getting like way over 1%, right? If I go down here and try to find 0.5%, I can go all the way down to the 21 fives or the 22 strikes. That is huge amounts of discount in a single week, guys. From where we closed on Friday down about 22 bucks, that's another 12% deep into our support range at a great valuation, and could be a very interesting location to start rebuilding some of those positions on SoFi that people may have taken profit on up here. So that is going to be stock number 4. And now stock number 5 is going to be one that I've been waiting for. And we've been talking about the last few weeks, man. It's Uber, right? We've been noticing that the price action was slowing down, right? Big rallies, but now they were cutting more and more into these rallies with these bear legs. And we finally rolled over the weekly into a weekly downtrend into the ever so elusive monthly consolidation that I've been talking about. And I always said, right, I'm waiting patiently up here, right? I was saying, now I don't really want to play here because I kind of see it coming. If we get the monthly consolidation now into the 12 EMA and into our support range down here, low 80s, I will be a big fan of playing Uber. So that's one of the reasons that I like it. The second reason I like it is the valuation. Let me casually just redo the valuation for you guys because I had it at 90, but let me just do it for you at 83 essentially, right? Let me just double check that the EPS number hasn't changed in terms of the forecast. We're currently sitting at about 350 is fine, so I'll just use that same number. So that being said, at 83 right now, sorry, I should have done this before the video, but hey, at least you guys are seeing how I'm kind of doing it, right? 83 divided by 351, that's a 23.64 on the forward peg, right? Very, very attractive for Uber right now in terms of that. And now divided that by the EPS growth rate of 16, you're at a 1.48 peg roughly, yeah? That's pretty good. And I assume since we're 10% higher, the free cash flow yield must be closer to 5%. Great fundamentals, good technical entry. However, let us check on the expected move, right? Big move down. Now, additionally, we have daily oversold conditions. When I can line up technicals in terms of supports and fundamentals being cheap, and additionally, we have short-term daily oversold conditions, it might just be a nice trade. And besides that, what did Uber do? To be down like 7-8% last week, right? Nothing. It's just the market throwing a bit of tantrum on everything. That being said, let's have a look at Uber right now and derive where we can possibly find some contracts below the expected move of maybe 81, let's call it briefly. So if we have a look at Uber here for the end of the week, you will see that we do indeed have 0.5% right down here at 80 in terms of the strike, but maybe even 79. If Uber starts off the week a little bit red, then maybe, who knows, you can maybe get the 79s or maybe even the 78s, which would be a really nice discount. And you would be into the start of the previous resistance range, which should be the start of the support range as well. And I would not mind playing Uber down there. So for me this week, guys, I'll try to get as low as possible, but I wouldn't mind any one of these three strikes. 80 down to 78 bucks. I think there's good value down there on Uber overall. And I will remind you, they had fantastic earnings, right? The market is just throwing a bit of a tantrum right now. So as you can see, right, all the 5 companies that I just named to you are some of my favorite companies. Maybe they're not your favorite companies, but whatever your favorite companies are, try and repeat the same exercises, right? Check on the fundamentals. Have they pulled back significantly from from where they were previously. Are the stocks currently down nicely from their all-time highs, 15, 20, possibly plus percentage points, right? So the fundamentals make sense. Do the technicals make sense? Are they close to very large areas of support? Possibly. Do they have shorter term daily oversold conditions? If you can line up a bunch of confluence factors and thereafter play these strikes with some distance, we have a very good chance of not being assigned. But if you do get assigned, at least you know that you're picking up some of these companies that have shaven off, months and months of price action, and that they're offering you some great re-entry opportunities on some high quality companies with good fundamentals, good business models overall, right? So that's it for your top 5 options plays. Hopefully you guys enjoyed those. Now I'll give you guys some bonus plays, and I'll do them in 4 different sections. Number 1, 4 growth stocks. Number 2, 2 value stocks. Number 3 is going to be a couple stocks for smaller accounts that only have maybe a couple $1,000 to play the wheel. So you guys are kind of constrained to smaller share price companies. And then after that, I'll give you guys some plays that I'm looking at for my big account as well. So some of you guys that enjoy playing companies that have a $300, $400, $500 share price, right? That you can afford to play those with big accounts. I'll show you which ones that I'm doing into this week as well. So let's get into the bonus plays. So for all the bonus plays, just keep in mind, I won't be giving you guys the expected moves. You guys are now professionals. You can do that on your own, but I will be giving you guys the levels that I like on these stocks and why I like them as well. So let me just move myself over and we will get into the bonus plays. So 4 growth names that I'm interested in. AMD, hey, it's been a while that we've been able to play this one, right? But now with the volatility, AMD is looking quite ripe. They're retracing a lot of that OpenAI move, and we're finally coming back into an area of price support, talking about the 180 range. Now, AMD is currently trading around 200, but if we pull back there, it's going to do a few things, right? Cool off some of the lower time frames here, come into our areas of support, and we can play this one with some pretty good distance, especially when the VIX is very high. You do not need to play this one too close at all to generate some premiums on it. Take a look down here, guys. I mean, I can go all the way down to the 180 strike and still get 0.5%. That's the benefit of a lot of volatility. That would be another 10% off on AMD. So if you have been looking to play AMD and you would not mind being assigned down there at 180, well, this might just be your chance, especially since the stock is trading at a very low PEG ratio right now, under a 1, 7.5 price to sales as well, with phenomenal forward growth aspects. But we know that the market has just been selling off everything associated with AI or anything growth recently. And as a result, I do want to benefit from some of these declines to be able to play this company that I haven't been able to play, guys, in a long time. It's been a month and a half that I haven't done anything on AMD. The last time we were playing it aggressively was down there, and I will start playing it as we come into those areas now. Moving into the second one, this one's going to be HIMS. So HIMS as well has suffered from a massive decline, almost red every single day here, guys, since the middle point of October. They are now daily oversold conditions into a nice area of support, which is 35 down to 30. So I am interested in playing this one because of just the technical degree of sell-off, but also because the valuation now is quite cheap. It's a 1.56 peg and it's only 3 forward price to sales. They are guiding for $6.5 billion, guys, of revenue by 2030. The stock is currently trading right now for just under $8 billion. So not a bad opportunity. I know that these long-term forecasts don't mean too much in the short term, right? Because the short term will be volatile, but at least you know you're kind of not really overpaying for HIMS in terms of forward growth aspects for the company. And you don't even need to play it too close, right? You can play HIMS with some pretty good distance as well if you like this company. Take a look right here. I can play this one all the way down to like 30, 31 for the upcoming week, which will be another 10+% sell-off from HIMS from the current area, another 10 to 12% sell-off. So I wouldn't mind playing HIMS down here. And even if I get a sign, guys, at least I know the premiums are pretty good for some covered calls. And at least I know I'm getting a pretty good discount on the price and it's in oversold conditions. Stock number 3 as part of the growth names is going to be Airbnb. Now, this one was on the list the previous few weeks just because of how nice it looked in terms of support. And that has not changed. They've made their way further into support. I mean, guys, like, what did Airbnb do in terms of AI? Nothing, right? So the reason that they're down is because the market pretty much took down almost everything last week. And that being said, we're now deep into support. We're just out of oversold conditions. And the valuation down here is pretty attractive at 125, where we last did it a few weeks ago, right? They're trading at like a 1.54 peg and an over 6% free cash flow yield. And they posted really good earnings. So that being said, I still don't mind playing Airbnb down here in the mid, teens, like 110, 111, 112 type of thing, and even a little bit lower. You got a lot of price action support down here the past 2-3 years. Valuation is manageable. They were just daily oversold conditions. So I would put this one front and center on my watch list if it's something that you guys enjoy playing as well. And now these I'm kind of hesitating on. I don't know if I should actually give this to you guys or not, but I'll give them to you anyways. these are going to be some fan favorite names like Robinhood. Yeah. So Robinhood obviously had a phenomenal rally this entire year, but then people forgot that what goes up sometimes must come down. That being said, Robinhood right now has a more manageable valuation. Finally, I haven't been able to say those words in a while, right? At 110, it's trading for just under a 2 peg. Still relatively high, but Robinhood is also coming down into its next support area, which is 106, down about $98. All these guys from down there, not quite daily oversold just yet, but almost, and coming into its 200-day moving average. Now, am I going to be playing right here? No, this is going to be one that I'm going to be using the momentum strategy or just volatility strategy by. I'm going to try to write, if I enjoy this stock and I don't mind being assigned, let's say I was in Robinhood, I sold Robinhood here. It's a company that I enjoy very much, but I knew it was overbought. I knew it was overvalued, and I was just looking for a pullback to possibly re-enter. Well, I'd be using the volatility strategy on this one, and as a result, I want to write as low as humanly possible because there isn't really much support, guys, on the way down. They didn't set much support on the way down. So all you're doing is playing the distance at a strike price that you possibly would not mind being assigned. I'll repeat that last part again. At a price that you guys would not mind being assigned. I hope I don't get any comments if you guys choose to write strike prices down here and say, Will, I played Robinhood, but I don't really have high conviction and they assign me at 85. What do I do? No. This stock is for a certain type of person that's wanted to possibly reposition in Robinhood, but hasn't had the chance. And if I had to play this as low as possible while still getting 0.5%, I would have to go down here at about the 92 strike. 92 is not too bad, guys. It's an additional sell-off in a week. I don't know if they can get here in a week, maybe, but that's an additional 15% off the current price below the 200-day moving average. And down there, if you are assigned, at least you can find comfort in the fact that you're buying it 40% off its all-time highs at a now more manageable valuation, while still the company is posting record numbers overall. That's stock number one, and I don't even know if I should give you guys this one. I hesitated. I was like, man, should I give them this? Are they gonna run with it too hard and misinterpret it and just go over leveraged on this one and just go too crazy? I'll give it to you anyways, guys, right? It's going to be Palantir. So Palantir as well has come down significantly from the highs. Now, I know what you're saying. They're down 25%, but they're still wildly overvalued. Yes, this is true. But we also know that they posted ridiculous earnings, some of the best SaaS earnings that the market has possibly ever seen, or at least, dare I say, seen in a very long time at this point. But we know that it needed monthly consolidation, possibly into where? Maybe the 12 EMA or lower, which is something Palantir's done many times throughout this ridiculous rally. This stock is only for the type of person that maybe you guys locked in some gains up here. Maybe you're looking to reposition in Palantir. You still believe in it in the long term, and you want to play a little bit of these pullbacks. But we also know the stock is fundamentally overvalued. And the next support area, although it is 150 to 140, it's not super solid, right? Arguably a bigger level down here would be the 127 area, 120, which is more close to the infamous 12 EMA. And that would be an additional sell-off on Palantir of all the way down here, another 15% total. Top to bottom drop would be 35-40%. Some of you guys may never play this one, but for those of you that are interested, okay, don't go too crazy on this one because it breaks a few rules, right? But only for the volatility. I'll show you how you can possibly play these ones if you're interested, right? That being said, if you take a look at the these weekly expiries, but keep in mind, you can also do 2 weeks out, 3 weeks out, 4 weeks out, whatever you guys want. I'll just give you the weeklies for now. If I'm looking for 0.5% for Palantir on the week, I can go all the way down here, guys, to a 134 strike. Pretty decent for a week of time. That's what the volatility does. It gives us insane amounts of distance for a given week. If Palantir opens up red on Monday again, well, you might be able to get even lower, maybe the mid 120 strikes, yeah? I'll give you an example of what we found last Friday during the sell-off on Palantir. I was looking for the December 19th, which was a month away at the time, and I was able to find all the way down here, the 115s. Take a look at where they were when we were looking at them early that morning, right? These short puts were $2.20. Okay, a few people in our group did take them, but that's a pretty decent sell-off, right? It's a pretty decent sell-off, and that at the time was almost 2% for a month, which is 0.5% per week. But from where we were down to 115 through December 19th, right? At that point, we're breaking 150, right? That would be an additional sell-off on Palantir in the next month of an additional 23% and a total top-to-bottom sell-off, if assigned there, of 44%, right? So you would probably argue that the markets would be pretty deeply oversold if Palantir gets down there. And maybe it's suitable to you if this is a stock that you were looking at, right? So Just play the volatility and try to find these opportunities. That's why I'm giving you guys these plays to show you the proper way, in my opinion, to play volatility with some good distance on companies that you may want to play. If you don't want to play them, then just don't play them, right? But I figured I should give you guys the ideas anyways. If not, I'm going to have a whole bunch of people, like I got last week in the comments, right? Playing Palantir too close, way too close, getting seduced by the short-term premium, very close to the strike price, right? You guys often have a problem with riding too close to the strike. You get seduced by the premium here. And then what happens? Well, you just get washed, right? You just get washed away in 1 or 2 days of trading. You get massively underwater, and then it tests your conviction, right? You ask yourself like, well, should I have actually done that? It's still a little bit high, right? Well, if you want to play the distance properly and not be too greedy, I just showed you the way, a good way to play distance without being too greedy, right? So that's everything for your growth stock segment. Spend a bit more time on that one. I hesitated to even show you guys Robinhood or Palantir because I know there's going to be some people that misinterpret it or play it the wrong way, but it's up to you guys, right? It's not my money, it's your money. However you choose to play it is completely up to you. Moving on to 2 value names now at this point in time for you value investors out there. Maybe I'll give a few more, but look, BX, decent sell-off right here. Blackstone coming off almost in a daily oversold conditions. Well, they bounced out of daily oversold for a few times. Look at this rapid decline from Blackstone, right? From September till now, not AI. So as a result, it was not working. 28% down, daily oversold conditions into the 2021 and 2022 highs. These resistance points, support for the markets, 200 EMA. Suffice to say, there's many factors of confluence here. So Blackstone, I do not mind playing. Very profitable company as well. And even if we get in terms of an assignment, right, it pays a 3.3% dividend, which not many people know, but they do pay a very nice dividend. Company number 2 is going to be PayPal. I know, one of the most hated stocks in the market. And although it's one of the most hated stocks in the market, guys, the fundamentals, I mean, you can't lie, right? They do have pretty cheap fundamentals right now. If you just have a quick glance, PayPal is trading for under a 1 peg. It's trading a 10 forward price to earnings, which is absolutely nuts. A 9, I did this at 74, by the way, so now it's even cheaper. Probably like a 10% free cash flow yield. Ridiculous amounts of buybacks per year. They're literally buying like 10% of the company back every single year. Decent net margins, decent free cash flow, but the market just doesn't care. But maybe you care. Maybe you think Palantir has some value to it down here, right? And I would be playing possibly under the $60 mark, which is 3 years of support at this point, while they've improved their fundamentals in that time. I know the market isn't liking it, but at least you can't say you're not getting a good deal on this stock if you choose to kind of play it down there. Some other special shout outs. I mean, some of these don't have the best volatility, right? But Altria has been one that I've been watching for a bit of a value play, right? A beautiful breakout retest on the monthly. Just look at this area, right? Very decent area of price action, held back the price for a while. Now we're kind of back testing into it. Altria, not the worst. You know, names like Verizon also in this whole under 40 region. Now these names don't have the best premiums, but some of you guys enjoy playing value names, and even a company like CP, right? Down here into our support range. Very solid. All these companies have one thing in common. They're very solid businesses with nice recurring revenue streams. And for the most part, they pay dividends. Well, except for CP. There's just a very solid industrial play. It plays under 1% dividend. But still, those are just some of the favorite ones I'm looking at. Obviously, there's many more, but I'm just giving you guys some examples. And I'm giving more examples than I usually give this week because I know people must have been quite anxious after last week's worth of trading. Now, moving into some of the small account plays, company number 1 has been one that I've been talking about, I don't know, like every single week for the past like 3 months or something like that. SentinelOne, cybersecurity company, decent earnings when they reported last August, right? We did the valuation at 19. It was really cheap, right? Down here is 3 years worth of support. And if you just want me to redo the valuation, I mean, the video is already long, so I may as well just commit to it at this point, right? In terms of forward metrics here, if I just double check the EPS, make sure nothing's changed in terms of the analyst expectations for next year, 32 cents. So it's actually, well, I did it for 2025. Let me do for 2025 end. If it makes sense for 2025 end, it's going to make sense for the future. 19 cents, not so bad. So if I just do a little bit of quick maths for you guys, 16 divided by 0.19 right there is going to be an 84 forward price to earnings. I know what you're saying. Wow, that's so high. Yeah, but they're growing EPS at 60% per year. So keep that in mind. That's why you use the PEG ratio, which is 1.4. Very cheap, 1.4. And price to sales, I mean, hey, just take like 10, 15% off this number. You should be very close to a 5 price to sales. For an industry that trades at 10, 15 price to sales, this one is relatively cheap. Nice support area. So this whole like 16 down to like 14 area, I don't mind being assigned on SentinelOne, and you'll probably find me playing it again in the near term future. Stock number 2, New Holdings. They just came out with pretty decent earnings, but the market wasn't having it. I like this one for a few key reasons. Number 1 is their earnings power. At around 16, 15 bucks right here where we should be playing it. It's not that expensive, guys. It's trading for under a 1 peg, a very low multiple in terms of forward price earnings as well. Yeah, I'll probably cover their earnings this week if I have time, but last week we had to cover the damage. We had to do a lot of damage control on the channel, right? So I didn't really have time to cover many earnings last week. I spent most of the week talking about the overall markets and different plays rather than spending time on earnings. That being said, if you come back down here, guys, a beautiful monthly breakout retest, kind of like Uber, 15 out of 14 is an area that I would not mind playing, but I would be doing this in 2 parts because we're extended from the 12 here. Some here, but knowing very well that if the market just keeps being sour, right, maybe we'll have to DCA down there. I would not mind either of these levels. And as a result, I'm going to be playing both of those levels. Moving on to Rocket right now, Rocket Mortgage Company number 3 right here. Rocket Mortgage, very decent, right? And does have some pretty good volatility. Take a look at this one. The cleanest time frame, in my opinion, is not that line that I just drew on the chart right there. No. It's this right down here. Yeah, beautiful area, resistance for the markets. Beautiful breakout on the monthly chart here. Retrace a little bit. If I find Rocket Mortgage on some declines, I do not hesitate to sell puts down here in the $15 to $14 range. Solid company, very good online presence for mortgages, of course, and you know, it will be coming into a rate cutting environment, which should accelerate their business in the next few quarters. So I definitely do not mind bidding Rocket Mortgage down here. Those are just a few small account plays. And now for the big account plays, I'll give you guys 3, okay? So number 1's going to be Meta. Meta, I mean, needs no introduction, right? Meta, a few key reasons why I like it. Daily oversold conditions. Yes, this is true. Daily oversold. The last time they were this oversold, the tariff situation, and the last time before that was the 2022 good old metaverse sell-off situation as well. Meta under 630, right? Trading for a 1.63 peg. I mean, at 600 right now, it's even lower. So imagine, I'm going to give you guys the 550 strikes down here because you can find some good premium on Meta down there. Geez, I mean, at 550, you're going to be trading at like a 1.5 peg under a 24 price earnings. And yes, I know they raised their expense profile. They raised their CapEx profile, which is giving some people PTSD from their metaverse spend in 2022, but it's not the same at this current point, guys, right? I'm still a big fan of Meta. I will be bidding on these dips, especially into daily oversold conditions like that. That's company number 1. Company number 2, Visa. Visa, still a very good buy. We were talking about it all the way here, and now it's just broken structure a little bit to the downside. But I mean, what did Visa do, right? To be doing nothing this entire year, absolutely nothing other than posting very phenomenal earnings, right? The market's just the market's just not giving a lot of love to all these high quality companies, but I am giving love to these high quality companies because it's very rare to find Visa under a 34 price to earnings multiple. And that's what they're trading for right now. So whether we're bidding here in the whole 330 range, which we were before, now the new range becomes a little bit lower, right? If we can find something down here under 320, 315, it's going to be the midpoint between the good old 12 and 26 EMAs. And if we can find the lower end of that range with some good premium, I'll keep playing Visa every single week, every single month, as long as they give me the opportunity, because historically, has it been a good time to be bidding Visa when it's between the 12 and 26 EMAs? Yeah, every single time, right? The only times it's actually come down to the 26 is, right, a big bear market and COVID, right? So it stands to argue, right? Is Visa somehow worse off now than it was during a global pandemic or during a bear market where we saw 8-9% interest rates and the fastest 8-9% inflation rates and the fastest interest rate hikes that we've seen in like 20, dare I say, almost 40 years since the 1980s? Is it really that bad for Visa right now? No, right? So that's why I will still be playing this one as much as I can. And then company number 3 is going to be good old Microsoft. Microsoft has not been on this wheel list, I swear, guys, at least in like the past 6-7 months. You remember last year, it was on this list almost every single week because we were flatlining here around the 12 EMA into nice support. Well, here we go again, right? Coming into the 12 EMA and now coming into the previous area of resistance that the bulls struggled with all of 2024, while now we have much better fundamentals and a much more clear picture of what they're doing with the cloud, right? We've been waiting for it and waiting for it and waiting for it. And I was saying, give me 470 down to 450 and I'll start playing Microsoft again. Well, that time is now here. And as a result, I want to be bidding Microsoft down here in the 450. So pay attention to it. That would be a nice sell-off of Microsoft from there to down there of almost 20% into support and also into the good old 26 EMA or close to it. And has it been a good opportunity to buy Microsoft when it comes down to the 26 EMA? I don't know. Let's go back in the last 10 years and see. The answer is indeed yes for this high quality, phenomenal company. And that's everything I had for you guys today. you guys enjoyed today's video, consider dropping a like. I would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these videos every Sunday in preparation for the upcoming week. And last but not least, if you have any questions on the strategy, or if you want to share your plays that you're possibly considering to play short puts on, definitely share them down below. I love reading your guys' comments and answering every single one. That being said, enjoy the rest of your weekend, and I will see you in the Monday morning or the Monday after the close recap, guys. So take care, everybody. Oh, by the way, if you guys want to join the Discord and get access to all my trades, private morning live streams Monday through Friday, and our educational content section, ask me questions and everything in between, get all my watch lists, get all my charts, copy paste everything. Sorry for the quick rundown of the Discord service, but that's what it entails. More details in the link in the description. We'd love to have you in there with us, guys. Over 300 of you have now joined our Discord, and we are now having lots of fun in there. Good trade ideas every day from me and my members. So that's it for me. Take care. Hope you guys do well. Peace.